Very happy to be back. So I'll share today how emerging technologies are going to transform digital experiences and what it means for people designing those experiences. AI is already transforming banking journeys. We heard that yesterday and today. In 2025, a third of consumers used an AI assistant for banking questions, either with their banks or with a third-party AI assistants, like LLM platforms. And among those who actually use the third-party AI assistants, have said that they did so to seek financial advice, and 50% to research financial products. But this is a shift that matters. When we asked them whether they found the answers helpful, they said they were satisfied with the answers, that they found that these third-party AI assistants provided answers that helped them resolve a query, compared to 52% when we asked them the same questions about the bank AI assistants. So emerging technologies accelerate the transformation of digital experiences in 4 ways. You heard that today already. These are going to change the way people interact with technology. Digital experiences are going to become more human-centered. AI-driven, multimodal, emotionally aware interactions will make experiences more natural, more intuitive, and hopefully more accessible. It will also amplify, I heard that word yesterday, will amplify customer understanding. AI, sensors, open data architecture, this is going to dramatically improve context awareness, intent detection, and the quality of insights. It will also increase automation of decisions, but also the experience, the orchestration of experiences. We see already today AI agents. They're going to increasingly handle decisions, but also orchestrate, coordinate the experience of end-to-end experiences with minimum human input. It will also increase speed. And we can see already today, but even more in the future, with edge intelligence, with advanced networks, all this is going to enable faster, more responsive, and real-time contextual experiences across channels. So what we're seeing is that interactions, like interfaces today, already, they're kind of integrating multiple modes of interaction: touch, text, voice, haptics, gesture. And we can see how, in the next decade, organizations will deliver multimodal experiences that reduce the friction between humans and technology. Already today, we have conversational interfaces, but those conversational interfaces are going to go beyond scripted responses. As they observe, they learn, they adapt, and they can respond with the right emotion, the right context, visual, and so on. But in the longer term, what we're going to see is that the interfaces are going to even understand users more, like better, because of eye movements, facial expression, gesture. This is going to blend multisensory input. And we can imagine how emerging technologies like the Internet of Senses, computer vision, edge AI, extended reality, all that is going to bring more immersive and more perceptive experiences. Well, at the same time, experiences are going to shift from being responsive, what we have today, to being more empowering. And this is going to happen through 3 connected phases. Well, first we have assistive experiences. So this is what we have today, using consumer understanding, preferences, real data to help customers make decisions. So we have today alerts, notifications, insights, and so on. Next, we have anticipatory experiences. So these are using context, predictive AI, so that they can anticipate users' needs, help them prepare, and deliver better outcomes. But ultimately, we'll have agentic experiences. And those experiences are going to understand customer intent and act on this intent. And in that phase, we have AI agents that can actually bring together and coordinate dynamically the content and the services that customers need, but also provide action recommendations based on or tailored to individual needs, and act on behalf of consumers with their permission. So what do we have in the future? Forward-looking organizations like yourself, hopefully, will deliver better, innovative interfaces, more assistive, more anticipatory, and more agentic experiences that will weave technology into everyday life. And this is what is going to empower consumers in ways that we can only begin to imagine today. So why does it matter? Because you need to ask yourself the questions. In that future, who are you designing experiences for? Because customer journey is actually splitting into two, right? In a zero-click world, discoverability is not just about what customers see. It's actually where the brands are going to be found and understood by humans and by AI systems. So now you now have two customers. You have your human, the emotional, trust-driven human, but you have the second customer, which is the data-driven, permission-bound, and goal-oriented AI agents. The leading organizations are not waiting. They're already preparing and delivering human-centered and AI agent experiences. And those who wait risk losing visibility, relevance, and influence. So you need to deliver financial health, branded, trusted digital assistants, but you also need to develop strategies to design for AI agents. The key takeaway: financial services organizations are not going to own the ecosystem, but they need to be the most trusted part of it. Thank you.
Excellent. Thank you, Aurelie, for kicking us off there. A quick note from me. After the event, you'll all receive an opportunity to submit some feedback on how you thought things went. Please do take a moment to fill that out. It's incredibly useful for us. So many of the programs that you see here today are a direct result of audience feedback. Our Impact Zone, where we have those early stage startups, our Founders and Funders session that ran Monday night, the scholarship program that we offer to demo companies. All of these are directly related to feedback that we've gotten from audience members over the years. So when you do get that, please take a moment, let us know. No comment too big, no comment too small. We really do care quite a bit about what you all think. Our next Analyst All Star who's going to give us her 7 minutes is Soraya Randhawa of Curinos.
Good morning, everyone. Today I'm going to be talking to you about onboarding, adaptive onboarding, account opening all the way through the first time that you log in as the first customer. And I'm going to be sharing with you some intelligence around portfolio, sales, along with customer experiences and real customer experience measurement. So let's get started to really understand the context that we're sitting in, probably in the UK at least, to get an understanding of what's happening in the market. We can really see that account opening, the appetite for account opening, is here, right? Despite the rate environment, checking accounts are being opened. There's a lot of promotions in terms of bringing new customers in. But that composition is changing. That composition has moved up, whereby the incumbents are actually losing share, from a sales point of view, to the challengers. And more importantly, the stock of current accounts, that's creeping up for the challengers in the last 3 years. So this is a pattern that's happening. So there are many reasons for this, obviously, right? There's a lot of reasons, but I want to look at perhaps the reason from an experience point of view. So we have this measurement where we call the journey effort score, and it looks at the taps, your scrolls, your questions, the type of fields that you have. We index that from an index from 0 to 200, with 100 as the midpoint. And we can actually see the amount of effort, thinking about the amount of effort an applicant has to make between the moment they start their journey as a new customer to the moment they log on for the very first time. And on both sides of the Atlantic, we see a divergence, a difference between fintechs and neobanks' journeys compared to what we see with the incumbent banks. And you see this here in the UK as well. When you look at the range of journey effort, the amount of effort that when you apply to the challengers, that's a much shorter range compared to that journey, that effort that you have to do when you apply with the incumbents. So just very briefly, so what does that mean? In the very simplest terms, there's an average of about 31 questions when you start your current account journey, compared to 49 questions. It's plain and simple. Do questions matter? Does effort matter? Yes. We've actually correlated data to be able to say the higher your effort score, right, the less likely folks are actually going to complete your application. You know, it's a no-brainer, right? This is what causes abandonment. If I have to apply, I have more effort, there are more questions on this, do I give up on the journey? And you know, there are many reasons behind that, but effort is one of them. I would also like to acknowledge that effort and abandonment are only part of the story. You can look at these screens, right? We couldn't complete your journey, you need to provide more information, we are going to go and send you to the branch. Off-ramping, right? That is going to cause a disjunction in the journey. The moment you're going to move the applicant from the digital channel into another channel, you've got a really high chance of further abandonment here. You're forcing someone to take even more effort to complete that journey. Not telling them why they've not been accepted, right? That's also going to create confusion and other aspects. But what I want to say here is, like, when we think about those who are on the floor at Finovate, those who presented on stage, there are opportunities here to really get more applicants through the funnel. Not just about KYC to remove them, to auto-decline them, but also to use data and AI to understand that is where you're personalizing, thinking about that applicant and how you can also let more applicants through their journey based on better data. So I want you to really think about this when we look at that journey. And I really look at that journey from the moment that you start discovery to the moment that you're kind of completing. There's so many decisions, there's so many questions that need to be made. And really, it requires orchestration of the entire journey to move everyone through efficiently. So whether you're asking questions around, should we be pre-filling? Where does enrollment sit? Where does digital enrollment sit? Does it sit at the end, or should we be capturing that in the beginning? You know, how do we actually, when we think about deposit accounts, like current account savings, should we make sure that they fund so they actually have got some skin in the game to continue that relationship and not be a dormant account? And of course, one of my favorite parts is at the end of the journey, right? What are you saying to that customer to get them engaged? What are you capturing for them in order to really drive that primacy? And this is just an example here. I've taken a small business example where I think the application and the bringing in of data is actually fundamental, because you need that data to drive your AI and machine learning, right? So good example, if you look on the left-hand side, that's actually capturing data at the point before they even submit the application about the integrations that a small business might actually have. And then playing that back to them once you approve them, to tell them to set this up. And then on the right-hand side, talking about other things that they may actually need in that journey with you, right? Again, making sure you're feeding that data in order to really drive primacy and retention, because you're thinking about that customer as a whole. You're thinking about that small business owner. Finally, what I'd like to say is this. This is your very first interaction with the financial institution. Don't lose this opportunity. Your onboarding journey is a positive platform for growth. It can drive better funding, good approval, good effort, better funding, drives a great experience right at the beginning. So thank you very much. If you'd like to know more about your Journey Efforts Core, come speak with me, and please join me today on the CX track, where you'll hear a lot more from other experts in terms of customer experience. Thank you very much.
Thank you very much, Soraya. As she mentioned, she will be in the customer experience track. There are several other tracks to choose from. Check the app if you'd like to see all of them. I know artificial intelligence will be kicking off as well. And then we have the risk track coming up, a payments track, and one more, which isn't on my note card in front of me, but it is in the app. So that was my clever way of making you all go to the app to look it up. Our final Analyst All Star is Tiffany Montez of eMarketer.
Thank you. Good morning, Finovate. Thank you for inviting me to be here today to talk about the bank in 2030, how banks are going to go from a product-centric model to a customer-centric model. Banks no longer own the customer. Customers are building their own financial ecosystem. They're prioritizing convenience, trust, and relevancy over legacy bank brands. To stay in the game, let alone lead, banks are going to have to rethink the banking model from the ground up in terms of what they offer, how they offer it, and where they show up. Banking relationships are fractured, and so is customer loyalty. Worldwide, consumers have, on average, 6.3 financial products and services, with nearly half being held outside of their primary bank. More than half of respondents indicate that they want a single app to unify all their financial accounts across providers. And if banks don't integrate and add value, they're going to become another forgotten account in the mix. The providers that simplify financial lives will win the relationship. In a world of complexity, the next era of banking is going to be defined by simplicity. To win, banks are going to have to organize around product needs, not your product lines. This isn't about consolidating products. It's about unifying financial decisions. From fragmented product offerings to frictionless journeys, today most banks still organize around products, checking, savings, and loans, forcing customers to manage each one of those accounts separately. If we take homeownership as an example, a customer may get a mortgage from a bank, but they have to separately seek out insurance and renovation loans all on their own terms. And that is a missed opportunity for banks to show up as a true financial partner. Customer-centric banking flips that script. It organizes around life stage, not your product lines. Imagine a single experience where a customer can hire a real estate agent, find property, take out a mortgage, get insurance, take out renovation financing, and even learn how to manage their home as an asset. The future of banking is no longer about pushing products. It is about building intuitive and relevant experiences in customers' everyday lives. Now, when banks move from product-centric to customer-centric, they're going to have to decide if they're going to go deep in one life stage, like retirement, or if they're going to go wide and orchestrate multiple life stages. Some may choose to take it even a step further and not only integrate financial products and services that are relevant to a life stage, but they may choose to also pull in complementary non-financial products and services to create an end-to-end experience. The key is going to be around organizing around life, not your product lines. In a world of choice, showing up at the right time is everything. Customers don't want financial products. They want timely advice and guidance in moments that matter. Yet most banks still sit back and wait for customers to initiate the journey. That model is reactive and outdated. To stay relevant, banks are going to have to be able to use behavioral signals to anticipate customer needs, to seamlessly integrate, and to provide proactive solutions in real time when customers are making decisions that have financial impact. Consumers are rebuilding financial lives on their own terms. Customers want products and services on demand, anytime and anywhere. And that means that you're going to have to meet demand in two different ways. The first way, by building a financial hub where you pull in all of the relevant products related to a life stage and also integrate third-party applications. The second way is through open distribution, where you actually integrate your products and services into fintechs, marketplaces, and super apps. Now, that's going to mean that you have to give up some control in the customer relationship, but you're going to gain unmatched visibility and relevance. Gen Z trusts big tech more than they trust banks. Gen Zers don't think in terms of financial silos, and they certainly aren't loyal to traditional banks. More Gen Zers would likely buy a product or service from Apple over their current primary bank, based solely on brand trust alone. And that puts incumbents up against big tech players like Apple, Amazon, and PayPal, which means the next go-to financial hub may not actually be a bank. It could very well be Apple Wallet. Banks may lose exclusivity in the customer relationship, but they're going to gain relevance. That trade-off is worth it. By leaning into APIs and embedded finance, you can show up in more places and potentially triple your cross-sell volume. And bank leaders are already on board with this vision. A third see that they will become a true digital ecosystem. 25% believe they'll be embedding banking and non-banking products, and 2 in 10 believe that they'll be in banking-as-a-service partnerships. The key is no longer about owning the full experience. It is about showing up and being relevant. Key takeaways. So first, as we move from product to customer-centric, it is no longer about owning the full customer experience. It's about showing up in moments that matter. 3 things to leave you with. First, customers expect seamless, predictive, and embedded experiences. Second, you have to give up exclusivity in the customer relationship, but you're going to gain many new touch points. And finally, you've got to be able to move fast, but you must anchor every innovation in trust. Because in banking, speed wins attention, but it's trust that wins the relationship. With that, I would like to thank you so much for being generous with your time and your attention. Greg, my friend, back to you.